The Crotchety Old Men podcast is not a registered investment, legal, or tax advisor or a broker-dealer. All investment financial opinions expressed by or on the Crotchety Old Men podcast are from the personal research and experience of the owner of the site and are intended as educational material. Although best efforts are made to ensure that all information is accurate and up to date, occasionally unintended errors and misprints may occur. Before you invest or make any investment-based decisions, consider your own personal circumstances. You should do your own research and seek advice from a financial professional.
Hi, this is George with the Crotchety Old Man podcast. Hopefully you've enjoyed listening to the Crotchety Old Men as much as we've enjoyed making each episode. If so, send us some feedback. We'd love to hear from you at the Crotchety Old Men podcast at gmail.com. Let us know what you enjoy about the show, what you'd like to hear more of. We'd love to receive your feedback. Remember, that's the Crotchety Old Men podcast at gmail.com. And as we always say, if you didn't know, now you know. Peace.
Well, it's another great day in the house of the Crotchety Old Men podcast. Good morning, good afternoon, good evening. You know how I do it. Whatever hemisphere you're in, hello from the Crotchety Old Men podcast. I'm one of the co-hosts, Gary Smith. In the studio with me today are all my comrades. George Crumley, PC.
Hey.
What up, y'all? Talk to me, somebody.
How you doing?
Everything's good, Smitty.
Everything's good, Gary. Everything's good.
Man.
It's a beautiful day.
Man. We got a surprise for our audience today. I'm going to let George do the introduction. This young man needs no introduction. It's a reintroduction, actually, but I'm not going to spill the beans, but I'm just going to pass the mic on over to Crumley.
Well, Smitty, as always, we try to give our audience as much information as possible. And this is no different. We had Andre on a little earlier this year, and we talked about his business, which is precious metals. But, a lot of things have happened in the world as we see it on a day-to-day basis. And we thought it was important that we bring him back on to kind of talk about the state of gold and silver and precious metals and how that's affecting the economy. And people are always looking for safe havens for their money, so we don't look at just the traditional ways to invest. We want to make sure one of the key words we always talk about is diversification. So here again, this is another tool in our toolbox that we should be looking at. So welcome, Andre. How you doing today?
I am glad to be here. I'm feeling good. I'm feeling great. It's a beautiful day outside.
For our audience, he's looking great too.
Oh, thank you. I always try to look the part.
All right, good. So, since we spoke last, a lot of things have been happening. And one of the things that really got my attention was the fact that gold was kind of on the decline. And then we had this recent uprising, which, it's a war. And we saw gold shoot up. Can you talk a little bit about that, Andre?
Okay, so can I use some terminology? In the financial space, you would say the market was cooling off. It was dropping down to what we call some support. When the market drops, it was in the $1,800 range, and now it's in the $1,900 to $2,000 range. That's one of the things that happens when socioeconomic things occur. Gold is more socioeconomic. Silver is more of an industrial. That's kind of how it works in our space.
So tell us, kind of expound on that. Why would a war have an impact on the price of gold and other precious metals?
So the first thing you have to realize is gold is the currency of the world. I don't care what country you're from. Somebody's going to take a bill paid in gold. You can't pay it in land necessarily. You can pay things in resources, but gold is universally accepted. Everybody's money may not be accepted. First thing that happens, you want to shore up your country. You want to shore up your situation. You buy gold. The central bank has been buying gold literally at I'm not saying all-time rate, but it's been the first time that they've been buying gold at this rate in over a decade, they say. And the numbers show that they have been buying it by the metric tons. We have our own issues going on here within, political situations. That doesn't really affect gold the same way it affects our financial markets. But the price of gold has it dropped for about 2 to 3 weeks. It was coming down gradually, but it recovered all of that market loss in literally about a week. So gold is on the brink of 1900 to 2000 currently right.
Okay. Quick question, Andre. It's been, one of the pros that I've understood about gold is that it's used somewhat of a safe haven, primarily, and especially during times of economic uncertainty, such as we're going through now, geopolitical instability and all that jazz, right? But at the same token, because a lot of countries, particularly the United States, is going to that fiat currency, the most salient question comes to my mind. A person has this gold, and it's supposed to be so valuable, but yet and still you're going to exchange this gold for what? Dollars. So what do they do with the dollars that they collecting this gold in? It's like, okay, I'll take gold, but give me all your dollars, because we all know that gold does not create any income or interest. So could you address that point?
What gold does is gold keeps your buying power. I don't care what country you're in. I don't care what industry you're in. Gold keeps your buying power. And as things get turbulent, they call it headwinds in the financial space. But what that really means is your money's worth less. Things pop up, uncertainty occurs. Gold keeps that buying power. Now, that whole concept of globally people want dollars, that is going away. I don't know. People should look up this thing called BRICS. If you're familiar,
the exchange of, when you sell the gold, just like you. All right?
Okay.
A person comes in to buy gold. What do they have to give you in exchange to get that gold bar?
Well, they do have to bring some dollars in. So they do.
There you go. That's
so what brings us to the table is we are the in between. We're the exchange. There's a rate that we buy at. We'll buy coins, bullion. We will deal with all gold, silver, platinum, and palladium, all the precious metals. Those are the 4 players. Sometimes there's rhodium. We deal it from all aspects in all capacities and all forms. But the ones that people are most familiar with, you're going to be familiar with jewelry, and you're going to be familiar with coins and bullion. Still produced by most governments around the world. People don't know that. But, we literally can't get it fast enough. Earlier points this year, people were waiting a month and a half. Our average client now waits about a week to 2 weeks. Everybody's flavor is different. What you want and desire might be a little different. So we can facilitate all those needs. If let's say you want coins, let's say you want a little bit of gold, a little bit of silver. We facilitate whatever that is based on what your budget is. And we don't really have a cap on that. We do.
So let me ask you this. I got this question. I don't know, Gary, was your question satisfied before I go?
Going to the next question. I'm just going to look at it from an investment perspective, and we're talking about diversification. Correct me if I'm wrong here or not, but last time I checked, gold does not create or generate cash flow. And pretty much if you invest in other alternative investments, that's what most investors are looking for. Now, I do understand that goal is to hedge, or I think, as you said, as a protection of wealth, I believe. All right. But when the volatility, like you said early on when you was on the podcast, I think gold was around $1,800 a ounce or what have you. I know during that time it's hit the 2,000 mark and it's come back down to 19. So there's some volatility there, although there's not the same correlation as it is with the stock market. But from an investor's perspective, could you touch on how gold really shapes up one's investment portfolio?
I'm going to say it like this. Let's just use the word confidence.
Okay. That's what
gold gives you confidence. Gold is your foundation. I don't care how big a house you want to make. Your foundation has to be good. So let's say a lot of our clients have made some money. You made some money, you've done some real estate, you've done some stocks, some bonds, you made some good money. You don't leave your profit on the table necessarily. You take the profit or you shore up yourself on your back end with precious metals. So as you trade, as you do other investments, your risk tolerance increases because you purchase some precious metals. Something about gold that being tangible, no matter what, you will always have it, no matter what the market does. There's no, it's the oldest form of money on the planet. So if you're going to go invest in, a company stock, I tell people, shore up yourself 10, 20% in gold, silver, because at the end of the day, you feel confident. Like I said, keyword confident, being that precious metals have stood the test of time and it'll always be there.
Okay, so my question is this, Andre, and I'm glad you joined the show.
Thank you for having me.
Um, explain to our listeners the relationship between the economy and gold, and this is what I mean. From what my understanding is, when the economy is at an all-time high, the volatility of gold plummets. When the economy is suffering, gold is at its highest level, as you were describing right now. Because the economy has been troubled, gold has shot up to $1,900, $2,000. So, what's the relationship between the economy and the value of gold?
So there's two schools of thought actually happening right now. Gold is always a safe haven for financial institutions, but we're in a different time where the computers are doing the trading. The computers are trading and hedging at the same time. So you might be like, okay, the market's doing well. Why is the price of gold going up? It's going up because the computer knows if I'm making money or taking this risk, I want to shore myself up at the same time. So they're buying the gold at the same time. Now, the markets have had, I want to say about a 1 or 2% pullback because some adversity has come into the market with being we're at war, so to speak, relatively. And the market, you've seen gold pull back from that. Traditionally, gold would have just kept skyrocketing. I go back to, I want to say about 8 years ago where gold made its last run. That was some turmoil with oil in Egypt and Syria, all those things. So I like to look back to history to bring context. So historically, gold goes up, things are bad. Gold is trickling up constantly, if you notice, over like the past couple of years since the pandemic. So people say, oh, it's not moving. It was 1,500 all of 3 years ago. So it just may not do what you wanted as fast as you wanted, but there is gains and it is still the surest thing on the market, if you ask.
So when you talk about strategy to your clients, and obviously, it's the same thing as one of the things that we talk about when someone asks how you should invest. The first thing you want to do is ask them, what are your goals? So with that in mind, so when a client comes to you, how does your strategy? What is your strategy in buying precious metals?
So a lot of you gentlemen talk about real estate. So let's say, for example, a lot of our clients also deal in real estate, and precious metals are how they shore themselves up, for example, allocating their funds. So let's say you made, let's use a round figure, $100,000 in real estate. You're going to go reinvest that money in something else potentially. But one of the things that you can do is put that money in precious metals. A lot of our clients do it. They'll take $30K and just say, hey, I want to allocate that into gold and silver. Now, the strategy is relative to the person. How fast do you need, or will you need any of that money back? If you need the money back quickly and in large chunks, then I would recommend gold. If you have a good ability to like you're liquid in other aspects and you don't need the money back as fast, then I would say more silver. Silver has the largest potential upside. So I would say do more silver than gold. Someone may say, oh, the premiums on, or the rate that you have to buy silver at, and it's cumbersome, it's physically cumbersome, sure, but from, let's say, the past 10 years, silver has shown historically some of the better returns than gold.
So
So
what's the relationship between rhodium and platinum and gold?
rhodium is more of an industrial use commodity. So rhodium is generally used in correlation with platinum. Um, Rhodium is generally used in correlation with platinum, but the rhodium I would not say is a vehicle that I would recommend to people. The people I recommend for platinum and rhodium are more of your intermediate, advanced level investors that are going beyond gold and silver. The turnaround rates for platinum and rhodium are going to be more of your 10 to 15 year windows, even 20-year windows, because there are industrial uses and a lot of the market is controlled through Germany.
Is that even when we're at war, when industry is at its height?
No. So you won't see platinum and rhodium jump when we're at war. You'll see gold jump as we've seen currently. And that's just how it correlates. Some things are more industrial, and there are gains to be made in platinum and rhodium, and even palladium. There are gains to be had, but I would put a smaller percentage. If you're an advanced trader, meaning you've done significant amount of your portfolio in gold and silver, and then you say you want to do some platinum, then I would recommend it. But it would not be your first or second options. It would be more like your third or fourth.
I like a lot of the information that you're providing to our audience. But, one of the things that I'm often curious about is, here again, why are we always left at the starting line? And when I say that, I listen to a lot of conservative stations as well as, other stations, regular media stations, because I want to hear both sides. I want to hear what everybody's talking about, regardless if I agree or not. And one of the things that I've noticed is that on more conservative stations, a lot of their advertisers are precious metals. And I'm always curious as to why, that is. It's directed at a certain clientele as opposed to everybody. You don't turn on your normal stations and see a commercial about gold or silver. But if you turn on a conservative station, that's one of the, people that are selling their wares. So from your perspective, can you talk a little bit about that? Why isn't gold and silver more mainstream?
So I'm going to give you two reasons. First of all, on your more conservative media outlets, people are preparing. People prepare better. They're generally going to be prepared for if power goes out, prepared for their financial future. You'll generally hear the term preppers. Things happen and they don't have to react. They've already prepared. There was a time where gold was $12 an ounce, and my more conservative clients, I'd be selling them droves of, silver, and they were like, great, I'll buy as much as you can, sell me. And they were just prepared. Other people are reactionary. So gold is now running at a high rate, and now you're trying to jump in the market. You don't buy it when it's high. I was begging you to buy it when it was low, when money was flowing and everything was great. Now you want to jump out the market that you're in already, and now jump into something when it's, the iron is already hot. So it's, that's one of those reasons why people react like that. That's the first thing. And at the end of the day, some people, they like I said, like to be prepared, and they don't like to react. So they're prepared already. They react, and other people react. And those are the two schools of thought as to why certain media outlets, need I forget, there's no hustle. There's no get rich quick scheme to precious metals. And more conservative people generally like things that are less risk evasive. I'm sorry, so more risk evasive. So they want to get in something that's consistent, that's sure, and they don't want to take as much risk as everyone else does.
But there's
Historically,
there's no risk in precious metals. They don't produce anything. It's not that I'm anti-precious metals. Don't get me wrong here,
yeah.
but they don't produce nothing. Okay, they don't produce one bar of gold. Does not produce another bar of gold. It doesn't produce any income. It doesn't produce any interest. It doesn't produce any dividends. No deductions. None of that.
But you know what it does?
It's just like
you know what it does? It keeps you sleeping well at night. At the end of the day, people think that everything has to be, has to give you these absorbent gains. It's your defense.
Okay,
and
exactly.
Defense counts for something. You still can't win a game with no defense. I don't care. Steph Curry can shoot all day. Somebody's going to play defense.
That's
you got to get a stop.
We're talking money here. Money, gold does. Let's go. Let's speak.
Okay.
There's pros and cons. Obviously, the pros, and that's all we hear about. But we still haven't gotten that clear, concise answer about what does the gold seller do with the cash money that they collect. They spend it. They buy other stuff. They don't buy more gold. All right. But more importantly than that,
you'd be surprised. So, for example, average return on gold.
And I'm not saying don't get any gold. So none of y'all send us no letters, no text messages, or anything about he's anti-gold. No, I'm not anti-gold.
But you're trying to
I want to bring it out for our audience because I know
a way of thought.
Out there thinking like
exactly. Because I get people that are skeptical about gold all the time, and then I say, okay, your returns are going to be gradual. They're going to be consistent. If you want consistency and being gradual, that's what precious metals provide you. There's no erratic behavior. If you want to just go and say, for example, I saw the market jump all this. Okay, great. Gold will consistently give you gains. You can rest assured that it's going to give you what you can project it to where it's going to be. That's not based on how you feel. You can look at the charts, and the history speaks for itself. It's consistent, and I have yet to meet somebody unhappy that bought gold in the past, and now they come in, they say, well, listen, I bought all this gold when it was $200 an ounce, or I bought the silver when it's $1.50 an ounce. And they're paying for real things, college tuition. They're paying for homes. They're getting their kids through college. They're going on vacation. They're doing all these things, but it wasn't a lot of hoopla to it. There's nothing glamorous. I mean, gold is sexy to touch, to look at, but at the end of the day, it's just going to sit there and incur value. At the end of the day.
One thing, south of the Mason-Dixon line, there's a whole bunch of folks with some gold in their mouth. And I'm sitting here thinking, saying, man, if I want me some daggone funeral homes or some cemeteries down south, now I know where the term gold digger comes from.
Listen, you'd be surprised. I get a lot of dental gold. You'd be surprised. There's a lot of gold in people's mouths.
You daggone Skippy. Shoot. And I'm thinking, man, maybe I should, instead of buying some doggone other companies, buy some funeral homes or some cemeteries. You know what I'm saying?
I got a question for you, Andre. You mentioned history a few clicks back, and I'm always interested in the relationships of things. Our dollars are not backed by gold.
Not anymore.
And they haven't been backed by gold for a long time.
1971.
Right.
Actually, further back than that, the 30s.
Actually, further back than that, Kennedy stopped that was 1963. Kennedy stopped the backing of gold. But here, on the other hand, we had a brother in Libya who was going to back his money and suggest 15 other African countries sign up for his currency. They killed him. Why was that?
So I'm going to bring up the BRICS conversation because that's the modern day version of what that gentleman was trying to do. And they basically put him down. Now there are enough players, bigger players, that you can't just run over. I use a correlation. If you go look up the 1933, pre-33 gold coins, they have denominations on them. They say $20, $10, $5, 1.5. That's how much our money was worth. So if you want a quick econ lesson, Look on the back of a old 1920s gold coin. It says $20. It was worth $20 worth of US dollars. That same coin is worth upwards of close to $2,000. That lets you know in real time what your money is worth in modern day dollars compared to where it was. And that's the correlations that I generally try to explain to people as in basic everyday economics, what your money is worth.
So who are these people that you're referring to? Who are they defining them
This
for?
is our government. Roosevelt in 33 took us off the gold standard. Kennedy was the last no, not Kennedy. Eisenhower had a $40, had a $1 coin with his face on it. But historically, since 64, our money hasn't been worth any precious metals. It used to be gold and silver, then it was just silver. Now we are completely off any regular production of precious metals outside of your silver eagles, gold eagles, and U.S. Mint products.
So here we got a brother. Here we got a brother who's backing a currency with gold, and he gets killed. So why is that? That question really has been
So there are a number of reasons. It takes power away from the people that want control. At the end of the day, you control the resources, you control the money. If I don't need dollars, I don't care where you are in the world. If you don't need dollars, I don't need you. Therefore, you lose control. Therefore, that's a problem for people that want to keep control. So chop it however you want. That's at the end of the day why BRICS is such a major thing right now. And people say it's not that major, but BRICS is it involves Brazil, Russia, India, China. I'm trying to remember who the S is, but other parties have joined this movement, and this is going to be a real problem. It's going to be a us versus them, and it's not just this side, our country. It's other countries involved that are making this an issue long term. So your buying power is being lost every day because other countries have basically become more aware. They're unifying against the dollar, and that's also combating what's making our economy unstable. We see it in real time now. We used to see it in over a period of years. I tell people, look at what you're paying at the gas pump and look at what you're paying at the grocery store. What does $100 get you? So gold is, like I said, going back to, it's a great storage of value, and it combats the loss of that value. And with other countries going toward a gold-backed dollar or a gold-backed currency, we're going to have more issues keeping the value here in what we spend our money on. Does that answer your question?
That it does, and I'm glad you brought that up because there are other countries that are involved in backing the currencies with gold, and where that's going to place us in the United States with our dollars that have no gold backing. How long do you think we're going to last?
We're leveraged and we're over leveraged. We just cut a check for another war. Every day it's just like diluting the juice. You're going to look around and things are going to be a little different. Is it going to be immediate? No. But long term, our kids, we don't know what it's going to be. And at the end of the day, if your money, I would say this, look at Europe. Look at what happens over there when their government has issues with currency. It's affecting us here. And you see the discomfort people are in from an inflationary perspective. It's going to be more of a problem going forward. It's just going to be, are you prepared? And henceforth, we go back to the original question is, why do I see these things happening on certain media outlets? It's because those people care about those things more than we do in other arenas. Now, at the end of the day, money is money. Like Smitty said, gold doesn't do anything. Gold doesn't grow. It doesn't give me interest, but it keeps my buying power while I'm doing other things. You still need dollars to function, But if you can watch that, okay, I'm losing buying power to function while I have this sure bet over here. Those are the benefits that you have to see. And unfortunately, you need to have disposable income or assets to have buying power. If you don't have assets, then you don't have buying power.
Oh, that S is that country is South Africa. I wanted to make sure that we got that.
Thank you. I wanted to say South Africa, but I wasn't sure.
Yeah.
Thank
you. Yeah, no worries. All right, man. I'm telling you, it's always a treat when you come on the show, Andre, because you share so many nuggets and you certainly expand our level of knowledge and understanding about these type of things. And it's great to have a brother like you who is knowledgeable, who has honed your skills and things, who can educate the masses about the importance of having precious metals in your investment portfolio. And I'm so glad that you brought it out today, because that's really what we want to do.
Well, thank you for having me.
Yeah, and bring it raw, man. Bring it real, because people are thinking about this, and I don't want nobody to have a ignorant reason. Put it that way, because ignorance not it's not a negative per se. Because if you come to the Crotchety Old Men podcast, you're going to get you're going to get that information. So I'm glad you were able to come out this afternoon, this morning, this evening, as you know, I say, and share with you, man. So before we wrap up, though, and of course, I want to pass the mic back to George, may have another question or two, but is there anything that we haven't asked yet that you've been anxious to tell us about, that we don't know already?
Well, one of the things that we do when we sit down with our clients is, what are your goals? We're not just a coin shop. What are your goals? We now have people that come to us, that invest at significant levels. We deal with anybody that's from, let's say, 50 to $500,000, even more than that. People are being very serious about investing in precious metals. This year we've done 2.5 to 3 mil in coins and bullion with the way that we've shifted our platform and approach. This is real money that people are allocating because they're really concerned about their finances. AlexLexington.com is our platform. You can go on the website, fill out the form, and somebody can contact you in not just the capacity of investing, as we like to say, but indulging as well. A lot of our clients have done very well for themselves, and they want to protect that wealth that they've created. And that's what we're here to, provide protection. We are like a life insurance policy for your money. So we bring a lot of value in that way to people's lives. And customer service is what we hold our head on, rest our hat on. So the luxury that we provide is you can speak to somebody, you can have a consult, and we are appealing to more serious investors because at the end of the day, the information is key. It's not that everybody can get it, but does everybody want it? And we want the people that are serious and want this information to protect their money in a very sure way.
Very stimulating conversation. Andre, I really appreciate you coming on. And here again, for those that are listening in, our guest today is Andre Osborne of Alex Lexington Precious Metals. And it's really important that, for our listeners here again, that, they understand, why we bring, guests on like this, because here again, mainstream America is not talking about buying gold and silver, and now we've had Andre on to tell us not only, why you should, here again, how you can, through his company.
Oh, and we're nationwide, by the way. So we compete on a national level. You can go on our website, the same way we can Zoom or, have a conversation. I've got clients in California, Florida, New York, you name it. We ship insured. And for people that don't even want to take delivery, we have the capabilities of depository services, not just in the United States, but globally, if you want to store your metal in someplace else. So we provide a high level of service for high level people like yourself.
Great. That's great. Because here again, we don't want to be left at the starting gate. We want to get out there and participate like everybody else. And the way we do that is get more information and get some education. So this has been a great, here again, stimulating conversation. So as always, on the Crotchety Old Man, before we get out of here, we always want to leave some words of wisdom. So Smitty, what you got for us today?
Well, today, quote goes like this. As I'm thumbing through my book of quotes, and I come up with one that says, the key to my success is my focus to never how good it is or how good it's going to get. My focus is on the percentage of how many times it won't work. Now, that was by Sam Zell. If you guys don't know Sam Zell, he was a billionaire commercial real estate tycoon and investor. They used to call him the grave digger because he would buy properties, distressed properties, and turn them around. So to summarize that quote, I know it may have been a little elongated there, but my key to success is never to focus on how good something is. In other words, don't focus so much on the upside. You handle the downside, the upside will take care of itself.
Oh, well said. Well said. As we always say on the Crotchety Old Man, if you didn't know,
Now you know.
Now
You
you
have a
know.
great day. Be blessed. Take care.
Thank you. Have a
Peace,
great day.
brothers.
Peace.
This is Dr. Paul Clemens with the Crotchety Old Men podcast. If you're interested in financial tools to build wealth, and you're interested in ways to maximize your health through holistic alternatives, then you are just the audience that we're looking for. Tune in each week, every Thursday, to the Crotchety Old Men podcast, where George Crumley, Gary Smith, and I offer you in-depth discussions on health and wealth. Subscribe to the Crotchety Old Men podcast on Google, Spotify, Apple, iHeartRadio, or wherever you get your favorite podcast.